Okay, so picture this. You're in the world of finance, high stakes, you know, big bets. You make a move and you earn $1 billion
Wow.
in a single day.
A single day. That's,
It sounds unbelievable, right?
it does.
Well, that's exactly what George Soros did back in 1992. And his secret weapon, a theory called reflexivity.
That's a really interesting one. It challenges how we usually think about markets. It's not just about like the numbers and the data. It's also about psychology
Mm.
and how what we think, our perceptions can actually influence the market itself.
So we're doing a deep dive today into George Soros and this theory of reflexivity. He's a legend, right? The legendary hedge fund manager, known for making these big, bold moves. So what are we going to do today? We're going to unpack reflexivity, see how it works, and figure out what lessons we can all take away from it
Awesome.
to better understand this crazy financial world.
Yeah, cause and effect, they're not so clear-cut in the markets.
Right.
It's not just that prices reflect reality, it's that prices actually shape reality. It's a two-way street.
So it's like a self-fulfilling prophecy, but in finance.
Exactly. Imagine a rumor spreads that a company is failing. Even if it's not true, if enough people believe it, they sell their stock, the company might actually go under. Perceptions, creating their own reality.
Okay, so it's not just how a company's doing, it's about how people think it's doing.
Yeah,
It's kind of scary when you think about it.
it is. It really highlights the importance of market psychology. And Soros breaks down these feedback loops into two types. You've got negative and you've got positive.
Okay, so negative feedback loop, it sounds bad, but it's actually a good thing.
It is. They're self-correcting, so they bring things back into balance, like oil prices. If oil prices go up, what happens? People start using less oil. Maybe they buy more fuel-efficient cars. Alternative energy becomes more attractive.
And that leads to new supply coming online, and then eventually those high prices come back down. So it's like this balancing act.
Exactly. A stabilizing force.
It keeps things in check.
Yeah. But then you've got positive feedback loops, and that's where things can get a little crazy.
Okay, so less balance, more like things getting amplified, right?
Yeah, right. Think about the dot-com bubble. Stock prices kept going up, which attracted more investors, fueled even higher prices.
Yeah,
The self-reinforcing cycle until the bubble burst.
a classic example.
Yeah.
But it's not always a recipe for disaster. I mean, Amazon's early growth, you could argue that was driven by the positive feedback loop, right?
That's a great point. Early investors, they saw potential, poured money in, fueled its growth. That growth attracted more capital, allowing Amazon to, expand, dominate the market.
Yeah, and they use that growth to branch out into other things too, right? Like cloud computing.
Exactly. AWS, it made them even stronger. So positive feedback loops, they can be dangerous, but they can also be incredibly powerful forces for growth if they're managed well, like Amazon.
Okay, so how does Soros actually use all of this? How does he connect this to how he sees bubbles forming and then eventually bursting?
Well, he believes every bubble, it starts with some sort of trend. Take the 2008 housing crisis.
Right.
Cheap credit.
Yeah, it felt like anyone could get a mortgage.
Exactly. Then comes the misconception. In this case, it was the belief that housing prices always go up.
So you have all this money pouring into the market, and everyone thinks prices will keep going up forever.
Yeah.
That's dangerous.
Dangerous combination. The trend and the misconception, they feed off each other. You get this frenzy, a boom. But then reality sets in. We all know how that one ended.
It's a reminder of how strong these forces can be. So how did Soros use reflexivity to his advantage? He wasn't just riding the wave, right?
No, he was looking for the exact moment it was about to break. That's where he saw the opportunity.
So he was going against the crowd. He was betting against what everyone else believed. That takes guts.
It does. Take his shorting of the British pound in 1992. He saw that it was overvalued, even though everybody thought it was strong. He bet against it. Made $1 billion in a day. It earned him the nickname, the man who broke the Bank of England.
Wow. That's a bold move.
Mm.
So he was betting against the narrative.
Exactly. He saw this disconnect between what people believed and the reality of the economic situation.
These were huge gambles, right? What if he'd been wrong?
Absolutely. There's inherent risk in his approach. Reflexivity isn't a crystal ball. It's not about predicting the future, for sure.
So what's the lesson here for someone like me? I'm not running a hedge fund. I'm not going to be shorting currencies anytime soon.
Well, I think the big lesson from Soros is that markets aren't always rational. Emotions and biases, they play a huge role. And understanding the prevailing narrative, even if it's wrong, that's crucial.
It's about taking a step back and saying, okay, what is everyone believing right now? And is it actually true?
Exactly. When there's a big difference between what people believe and what's actually happening, that's where you might find an opportunity.
So it's about recognizing those moments where reality and perception are out of whack.
Right.
But how do you actually do that? It still sounds a bit theoretical to me.
Okay, let's say you're looking at a company. You want to invest in it. Start by looking at the story. What is everyone saying about this company? Is this the next big thing? Are they going to, revolutionize the industry?
You're trying to get a sense of the narrative, the buzz.
Exactly. Then you dig deeper. Look at the company's performance, their financials, the trends in the industry.
You're checking if the story matches up with the facts.
Right. And if it doesn't, if the narrative's way off base, that's when it gets interesting.
That's where the potential is.
Exactly.
So it sounds like you really have to do your research. You can't just follow the crowd.
You got to think for yourself. Challenge the conventional wisdom. That's what reflexivity is all about. Thinking critically, questioning assumptions.
Like putting on a new pair of glasses. You see the world in a whole new way.
Exactly. And that's valuable, whether you're investing, reading the news, just trying to make sense of things.
So if there's one thing for our listener to remember about reflexivity today, what would it be?
Markets aren't always rational. Our perceptions, our beliefs, even our biases, they all play a role in shaping market reality. And once you get that, it can really change how you see things.
It's a powerful insight. And it's just the beginning of our deep dive. We'll be back with more after a quick break.
Welcome back to our deep dive on George Soros and his theory of reflexivity.
So we've been talking about how markets aren't always, driven by pure logic.
Right.
And how Soros used this idea to make some pretty amazing moves.
He wasn't afraid to go against what everyone else was doing.
Not at all. But how do you actually apply this reflexivity thing?
Right.
It still seems kind of abstract.
That's the million-dollar question. There's no, magic formula or step-by-step guide.
It's not like he had an app that told him, okay, now short the pound.
Exactly. It's about understanding those underlying forces, those narratives that everyone's buying into.
Right.
And then looking for those gaps between perception and reality.
So like with the British pound, everyone thought it was strong.
Right. But Soros saw those weaknesses that others were overlooking, like cracks beneath the surface.
And that gave him the confidence to make that bet.
Exactly. And it wasn't just blindly betting against the crowd. It was a calculated risk.
Okay, so let's say I'm trying to figure out if a company's a good investment. How would I use reflexivity there?
Well, first, look at the story everyone's telling about the company.
Like, what's the hype? Are they the next big thing? Are they going to change everything?
Exactly. Then you got to dig into the fundamentals.
Are they actually living up to the hype?
Okay.
Do the numbers add up?
If you see a disconnect, if the story and the reality don't match up, that's when things get interesting.
That's where you might find an opportunity or, a big risk.
You're spotting those times when the market's caught up in a story that's detached from what's really happening.
So it sounds like reflexivity is about being skeptical.
Absolutely. Don't just take things at face value.
Right.
Question the assumptions that everyone else is making. Even, the experts.
That's what makes it so powerful. It's a way to think critically, a way to see the world differently.
It's about how everything's connected, how those feedback loops are always at work, shaping reality.
Yeah.
And it's not just about, making money in the stock market. This is a way of thinking that you can apply to anything, anywhere where you see perception and reality kind of mixed up together.
Especially these days, right?
Yeah.
With all the information overload, all these different opinions and narratives flying around.
It's more important than ever to be able to see through all that noise and figure out what's actually going on.
That's where reflexivity comes in.
Helps you understand how the world really works, navigate all the complexities.
Yeah.
And ultimately make better decisions, whether you're, investing, looking at a political argument, even just trying to understand the news.
It's realizing that how we see things, it doesn't just reflect reality, it actually helps create it.
Exactly. And that can be, kind of empowering and a little scary, don't you think?
Definitely. It's like that saying, the map is not the territory.
Precisely. The way we see the world, it's not always an accurate picture of how things actually are.
And that's where you get those misjudgments, those bubbles, those booms and busts.
So how do we protect ourselves from that? How do we avoid getting caught up in those loops that can lead us astray?
That's a great question. And I think it's something that Soros himself, struggled with throughout his career.
He definitely saw the dangers of reflexivity,
Yeah.
how things can kind of spiral out of control.
He saw it in finance. He saw it in politics.
So what was his solution? How do we harness the power of this without becoming victims of it?
Well, he was a big advocate for regulation. having these systems in place to prevent those positive feedback loops from getting out of hand.
Makes sense.
He believed that markets, if you just let them run wild, they can become detached from reality.
Right, which leads to those big crashes.
Exactly. And those can have, huge consequences for everybody.
But he was also realistic about the limitations of regulation.
Right, because regulators are human too.
Exactly. They have biases, they make mistakes, they see the world through their own lens.
So for Soros, it wasn't just about rules. It was about creating this culture of critical thinking, skepticism,
Yeah.
questioning assumptions.
Always questioning.
He thought the best way to protect ourselves from the dangers of reflexivity was to be aware of it, to understand how it works, and to constantly question our own perceptions.
That's tough for a lot of people, admitting they might be wrong.
Especially when we're so sure we're right.
Right. But that's the core of Soros's approach. It's not about being right all the time. It's about recognizing that we're all fallible. We all make mistakes. The world is more complicated than we often realize.
It's this constant process of learning, adapting, refining our understanding of how things work.
Being willing to change your mind when the evidence tells you you need to.
Yeah. It's a journey of, intellectual exploration, challenging ourselves to see things from different perspectives.
And remembering that, that map isn't the territory.
Right.
Our perceptions aren't always a reliable guide.
That's the beauty of reflexivity, isn't it?
It's a way to understand not just financial markets, but the whole world with all its, connections and complexities.
Yeah. It encourages us to be more critical, more skeptical, more humble intellectually.
And to have a more, nuanced and informed understanding of all the forces that shape our lives.
Those are qualities worth striving for, no matter who you are or what you do.
Absolutely. It's about empowering ourselves to be more thoughtful, more insightful, more engaged with the world.
I like that.
It's especially relevant today with everything being so complex and uncertain.
Right. And that's what we're trying to do here on the deep dive, to help
Yeah.
people navigate that complexity.
Exactly. One deep dive at a time. So stick with us as we continue to explore these ideas, these thought-provoking ideas from George Soros.
Welcome back to the deep dive.
We've been talking about George Soros and his theory of reflexivity. It's a fascinating theory,
It is.
but it's also a little controversial.
Right. And we've talked about how he used it to, make some really big moves in the markets, and how it really challenges us to think differently about how the markets work.
Right.
And even, how the world in general works.
Yeah.
So before we wrap up, I'm kind of curious.
Yeah.
What are some of the criticisms of reflexivity? No theory is perfect, right?
Oh, you're absolutely right. Every theory has its critics,
Right.
and reflexivity is no exception.
So what do people say?
Well, some people, they argue that it's too subjective.
Okay.
It relies too much on how we interpret things, like narratives and perceptions,
Right.
which can be hard to measure objectively.
Right. Because there's no, formula for reflexivity.
Exactly. There's no way to plug it into a spreadsheet
Right.
and get a definite answer.
You can't just calculate it.
No, it requires judgment, interpretation, and that opens it up to bias,
Yeah.
People's own perspectives can influence how they see things.
What else? What are some other criticisms?
Well, there's also the argument that reflexivity can become like a self-fulfilling prophecy,
Okay.
meaning that if enough people believe something, even if it's not true,
Yeah.
their actions based on that belief can actually make it happen.
So it's like a chicken and the egg thing.
Yeah, in a way. It's hard to separate cause and effect when you're dealing with perceptions and reality.
And what about Soros himself? Do people criticize him?
Oh, definitely. Some critics say his success is more about, his skills as a trader than about reflexivity being true. They say he's just really, really good at reading the market, anticipating how things are going to change.
Which is pretty valuable skill in itself, right?
Absolutely. But Soros would argue that his success is tied to reflexivity, that it's what allows him to see things others don't. And, his track record is pretty impressive.
Yeah.
It's hard to argue with that. It can't all be luck, right?
Right.
It seems like there's something deeper going on there.
So even though reflexivity might not be perfect, it gives us this really powerful tool for understanding this crazy world we live in.
It really does. It encourages us to think critically, to question those assumptions that we make,
Yeah.
to be aware of those feedback loops that are constantly shaping everything around us.
And that's super important, especially today, as things get more and more complex.
Exactly. It's essential.
So as we wrap up our deep dive today, what's the one thing you really hope our listener will take away from all of this?
I think the biggest takeaway is to remember the power of narratives.
Hmm.
To remember that how we see things, our perceptions, can shape reality just as much as reality shapes our perceptions.
It's a reminder to be careful, to be critical, and to really question the stories we tell ourselves and the stories that other people tell us.
Exactly, because those stories have power. They can influence our decisions, the actions that we take, and ultimately how things unfold.
So next time you're looking at, I don't know, an investment or a news story,
Mm.
or even just talking to someone, take a moment to think about the reflexive forces at play.
Right.
Ask yourself, what are the stories here?
Yeah. What are the narratives?
Are they based in fact? And how might those stories be actually shaping the situation?
Because once you start to see the world through that lens of reflexivity, it changes everything.
It's hard to go back.
It changes your whole perspective,
Yeah.
how you understand things.
And it changes how you make decisions.
Exactly. It's a journey worth taking.
It is. It's a journey of constantly learning, challenging ourselves, and, growing our understanding of how things really work.
And that's what the deep dive is all about.
That's what we're here for.
So keep exploring, keep questioning, and keep diving deep into the things that you're curious about.
Yeah, there's always something new to learn.
And we'll be here to help you along the way. So be sure to subscribe to the channel for more deep dives into fascinating topics.
We'll help you understand the world a little bit better.
Thanks for listening.
We'll see you next time.